Yeah. Good evening. Thanks to everyone who called in, Jeremy, KW, Esme, and also Win Leong and Augustine. Okay. We have not seen Juki for a very long time. Okay, so can you see my screen?
Yep.
Yeah. Okay. So we are now at the end of September. So we will talk about October, which is a month of the main theme looks like is collaboration. So okay, and today's agenda, as usual, we will start with the introduction, okay, and then the disclaimer, a brief recap of last month, September's forecast, the influence of the five element energy in the month of October 2023, the October 2023 geopolitical and financial forecast, and also the summary by both of us. Okay. So as usual, we will start with a disclaimer that the content is purely based on our study in global trends in relation to the five elements Chinese astrology for you to use as a guideline in your investment decision. And we would like to caution everyone here to be careful in your investment, especially in such volatile situation, and you have to conduct your own research on the company that you want to invest. And also, we will not give up any stock advice. Okay. Let's recap a little bit about the month of September. So the month of September is actually Sinew, which is a pure sin matter pillar. If you look at this month or this year's Li Chun chart 2023 for the water rabbit, you cannot find any metal. Okay. So for this month, the metal comes up. Okay. And the hexagram was small exceeding. And you can see that the metal comes up, the attention actually is on gold trading as a trading currency. I think there's a couple of things that's going on in gold as well, and buying in of gold from different countries. However, I have predicted that it does not really increase the price. Okay. The attention will be given, but there is no increment in price so far. In fact, it has dropped a little bit as well. Okay, it holds steady. And there's also progression of war. Natural disaster is there at its peak. And one thing that we look at very interesting is that in the month of September, it pulls in the pink energy. So most of the energy stock like uranium, oil prices, they all also, going up. And in terms of the market, the small ascending means that gradual, shift. So we can see that in terms of gradual falling of also the trade volume in I think in the manufacturing world as well, and also gradual falling in productivity. That's what we can predict for this month of September. Okay.
Yeah,
And
Evelyn,
yes,
I just want to add regarding the goal. What you say is pretty correct. Now one of the thing is that there is massive losses in government bonds here, all across the world, from Europe side to the US side. So apparently there are a lot of margin calls because of the loss in the bonds. So what happened is that some of the stocks and some of their commodities in order to meet the margin calls. So this is based on some observation. And the thing is also true that there is now two different markets for gold. One is in Shanghai, the other one is in the UK and US. So Shanghai gold is selling at a much higher price in renminbi, and converted to US dollar is actually at more than $100 premium to the COMEX and LBMA gold. Now there is a strong that unwinding its US dollar reserves and is buying gold through
BC,
the
I think we sort of miss out some parts that you're talking about, that they are winding down the US gold reserve and then followed by there is
okay. So what is happening is that they are unwinding their US dollar reserves. So they are using the US dollar that they hold not through the normal COMEX or LBMA, but they are to secure as much gold as possible. And one of the thing is that they are buying directly from the miners. Now the miners gold that they sell are actually what we call doré bars. Okay, so it's not purified. In order to be 1 kg bar that is in China, you need 9999. So what they do is they buy up the doré bars from the mining companies, and then they bring it back to China to refine. And they are not going to wait for the Swiss refineries, which normally where they have been buying for many years. So they are refining direct in China and then selling it at a high renminbi to the Chinese citizens. So what happened is that the price of gold in renminbi when converted to US dollar is actually at a $100 premium, more than $100 premium. And the same is with silver. Silver is about 10% premium over the COMEX and LBMA. So this goes to show that China is quickly protecting itself and there's now a lot of advertisement on TV to encourage its citizens to buy gold. So it goes to show that China is preparing for some event. Okay. Okay, Evelyn, back to you.
Okay. So definitely the attention suddenly comes out in September month that all this going on in gold. Okay. So I already, I think, predicted stating that there's no support on the price itself, but we can see that there is really a high interest over precious metal. And the funny part is I saw this report also. The world, including China, is unwilling to lend to an empire that prints money. I think everyone knows what the empire is, which empire we are referring to.
Yeah, because anyone that buys US Treasury now, they are sitting underwater.
Okay.
Because the yield has shot up so much.
Yeah. And also, there still continue to be natural disasters, flooding. The war still gets more intense. Okay. And also, as I said, that economists report that falling trade volumes, maybe in productivity has gone down. That's why the trade volumes also has gone down, even started from July onwards as well. Okay. And another one, oil, gas, uranium that has, shot up. I think we have already predicted in our yearly book of 2023 about energy as well. So we hope that our members has, stock up and put in some bandwagon into it, because the trend is like this one. Because Chinese metaphysics, we can give you roughly the trend, but we cannot exactly tell you the exact timing. Okay, so it is until a certain trend, certain times that the element supports, then we can tell you that roughly this is where you should focus on. Okay.
And also the last time when oil price shot up to 80 plus, the Biden admin was able to withdraw the oil from the strategic petroleum reserve. So right now the reserve is down more than 40%, yeah, and they can't. By right, they shouldn't, but I think they are going to continue to draw down from the reserve, which is going to be a major issue because that means that the US will have depleting reserve in case of emergency. So I think OPEC and Russia is sensing the weakness here, and I think that whatever that is happening, whether it's a recession, some people will say that oil price will go down in a recession. I would think that if the recession comes, they will cut the production of oil even deeper to maintain that price, because I think all the BRICS nations are reaching a consensus that it's time to reshape the world.
Yeah, remember collaboration. So the BRICS nation could be one of the collaborations we talk about in this October as well. Okay. And also, definitely, if you read our book on Unlock Your Wealth Potential, so you will roughly know that, what is the focal point also in terms of energy. Yeah. So in the month of October, the 5-element energy, this is an interesting month where we have the month pillar, which is a rock wealth. Rock wealth means that is the outer ego of the day pillar or the Li Chun chart. Means that the inflation will continue, but there will be government authority trying to control people, trying to control movement. There will be disruption of government itself because of the rock wealth that happens, and also there could also be collaboration because rock wealth is the same elements but in a negative in a young form of this day pillar. So the weather will also be damp and cold, okay, and the property markets will continue to have challenges because of the sheet, the earth, okay. And in terms of the month hexagram is number 45, which is gathering. So here means that the power of coming together to achieve a common goal. Maybe the BRICS come together to achieve a common goal. The government leadership will sort of pool together resources, okay? Or maybe US government is trying to collaborate with somebody else to sort of, start a war as well. This could be some kind of a collaboration and partnership. As I say, that this is also a rock wealth month, so chances that there will be also partnership, but however there will also be conflict of interest, and there could also be wrong timing of partnership that could happen when the negative aspect of this hexagram shows itself. Okay, so I think this is the energy for the month of October. So over to you, BC, on the run through of September.
Okay. So so basically we got a lot of things right in the month of September, and inflation edged higher, okay, while core inflation remains sticky. Now, regional banks risk continue to mount, and the regional banks ETF, the KRE, has fallen 8.3% month to date, up to 28 September. And bankruptcies will continue to rise as borrowing and refinancing costs jump. So you can see that the 4-week moving average of US bankruptcy filings have reached the same level as the 2008 global financial crisis and 2020 pandemic crisis. So we are actually teetering on the edge. So we also mentioned the high indebtedness among consumers will become more prevalent, and delinquencies will continue to rise. And you can see that the delinquencies level, okay, after the drop, okay, in 2021, right now is on the rise again. So as Evelyn say, there could be volatility in the market. So the Dow, S&P, and Nasdaq have fallen 3.4%, 5.2%, 6.4% and 6.7% respectively month to date. So that was, I think, up to 28 September. So yesterday, some of the indices have further dropped. So a sustained market sell-off could impact all types of investment, including precious metals. And gold and silver is down 3.4% and 7.7% respectively. So this is something that is very algo driven, which means that the trades that run on algorithm, because after many years of educating those algorithm trading platform, whenever people sell stock, they see that people want to convert the stocks into US dollar, and therefore that will push the US dollar higher. And when that happens, then the only right thing to do is go long on the US dollar and sell the commodities and precious metals. So this has been ingrained into the system for many, many years. But I think that what is really driving the sell-off is also because, as I mentioned, there's margin calls in treasuries across the world, because the losses from the treasury, from the bonds, is forcing margin calls, and people are actually dumping whatever they can to meet that margin call. So that is another way of some analysts are describing the situation. So more signs of economic challenges in Europe. In September, Germany's manufacturing PMI fell to 39.2. UK manufacturing PMI fell to 44.2. And France manufacturing PMI fell to 43.6. Now, these are, when PMI is below 50, is considered a contraction. And manufacturing is very essential for many economies. In the US, it's more service-orientated, and without a manufacturing base, the economy cannot grow strong. And that is why you can say that China has remained pretty steady despite a lot of headwinds all through the years, mainly because China has become an industrial giant. When you do not have a manufacturing base, you will rely on foreign goods. And that reliance on foreign goods will actually be a problem when your services sector fall, because there's not enough money to support the service industry. Because normally, if you have manufacturing create goods can be sold, and then that money can be cycled back into the service sector. But if you do not have your manufacturing is not strong enough, you have to rely on a lot of import. That's when your trade deficit will suffer. So we also got it right that social disorder in Mediterranean countries, as invading immigrants flock to the countries. I'm sure you have seen in Italy a lot of North African inflow, of immigrants is causing a lot of tension with the local community. And there is more anti-war movement in Europe, especially in Germany, in Czech Republic, and a host of other nations that are closer towards the east.
Okay, there's one more thing that I would like to say about China's manufacturing. A lot of people are under the impression that a lot of countries or a lot of manufacturings are migrated to countries like Vietnam, India, and all this, which is actually not true. China is actually moving up in the supply chain. Okay, so that means they are manufacturing more high-tech products like LCD, battery cells, and all these things, and all those lower assembly that is nearer to the consumer or the lower tier has been, has been moved or shifted to Vietnam, to countries like, in Southeast Asia and all these things. So that's why China will still remain strong as a manufacturing hub, but it's just that they are moving up in the supply chain. Okay.
Yeah.
So yeah. So every day you see reports, saying that, people or manufacturing has been shifted to other countries, which is on the lower tier, because right now we are in the world of supply chain. And a lot of governments fail to recognize this or choose not to recognize this to fit their narrative.
And we can already see it that a lot of countries are panicking, especially in the semiconductor. SML, in fact, is maintaining its research center in Beijing, with more than 1,000 employees. And Hynix and Samsung, I think, they got a free pass to continue to sell to China. But I think China would ignore foreign because they already sunk the boat, and China will just carry on with improvising its own local semiconductor industry. And an interesting development is that China right now is building a electron accelerator that will accelerate the it's like ASML. They have the EUV within a box that can be shipped overseas via a container. Okay, but China now is building a factory of EUVs, which means in the electron accelerator, it will accelerate electrons at different stations, and each different station will be a series of EUVs. So that means that if this can be done, then the EUV that we talk about is multiple EUVs in the size of a few football fields. Okay, so that is when it will be very cheap. And I think China, when all these are going to be the production cost is cheap, they'll just dump it mass market, and then that will be the end of the so-called chip alliance, chip 4 and all those. Okay, so in fact, NVIDIA, Intel, they are very, very worried, and Intel say that if there's no China market, there's no sense in building a factory in the US. And even TSMC right now is saying that there's lack of skilled talents in the US, that after the initial production, they have to ship it back to Taiwan to refine the whole process in order to come up with a finalized chip. Because there's lack of talent in the US. And in fact, the TSMC factory now, production is supposed to run 2024, postponed to 2025. Right now, they say it could be 2026. So
okay. And also,
yeah.
not only no talent, but actually the manpower or the labor cost in US is very, very much expensive compared to Asia also.
Yeah. So the other thing is that they are getting the Taiwanese to work long shift, while the US employees refuse to work long shift. So a lot of people are also very cheesed off with the management, especially Taiwanese who have been lured there. So eventually, what happened also, TSMC is also losing a lot of talents, because the moment the Taiwanese reach US soil, they are being pushed by US chip companies, okay, like Intel and all those, with better pay packages and all those. So TSMC has actually put itself in a hole, spending tens of billions of US dollars in something that it can, I think, will find difficult to monetize in the long run.
Yeah, that's right. So that's why I also avoided TSMC share.
Yeah. In fact, if you are, I think, right now there are some companies that are in China that they are taking away the share from Lam Research, that they have taken over as much as 85% of the etching machine, etching equipment orders, and also a number of equipment that they are going local. So I think those are the if you are interested in semiconductor equipment and all those, I think China is the place to be eventually, because their capacity is so huge, and they have they are going to, previously they targeted 70% locally made. Right now, I think they are going for 100% because they know that they have to do everything themselves from scratch. So the other thing is that back to China, real estate in China remains challenging. We'll discuss a bit on that afterwards. China's CPI and core CPI remain in single digits, and China domestic travel surged in the summer, surpassing 1.8 billion in number, generating a total tourism of 1.21 trillion. And that is the reason why China's economic outlook, suddenly turned for the brighter, because of huge consumerism. And Chinese travelers are less they are no longer traveling overseas like they did before. Rather, they are actually more eager to travel domestically, mainly because of the anti-Asian kind of rhetoric in many Western nations. So they prefer to travel locally. And China's solar power project saw 82.7% year-on-year for the first 8 months of 2023. Its investment in nuclear and wind power projects surged 6.9%, 38.7% from a year ago, respectively. So you can see that in the renewable energy, China is already a powerhouse, and so much so, okay, because China realized that once it reached a certain capacity, there is no way that other nations can compete. And even some European countries are actually importing solar panels from China. In the US, they are still refusing because they tie it with the Xinjiang story. Okay, so high-tech manufacturing continues to be robust, with export of new electric vehicles exceeding expectations, and EVs exports rose 110% year-on-year for the first 8 months of 2023. China trade surplus reached 3.86 trillion in the first 8 months of 2023. Now, if let's say China is collapsing, then we wouldn't see significant trade surplus, because that means that its export is actually hurting very deeply. But there's another story to that afterwards. Now, looking at the US recently released economic indicators, the CPI came in at 0.6% month-on-month in August. Year-on-year, it grew 3.7%, up from 3.2% in July. So with oil spiking above $90 per barrel, CPI is destined to go higher. So we already anticipated all this many months ago when I mentioned that inflation does not come in one cycle. It comes in a few cycles, and each cycle will be much higher than before. So right now, with the SPR reserve being dwindled to by 40%, the challenge is that the more they release the oil from the SPR, the oil stocks from the SPR, the more precarious the situation is in the US when an emergency occurs. So that's why CPI is destined to go higher. Now, core CPI came in at 0.3% month-on-month in August. Year-on-year, it grew 4.3%, down from 4.7% in July. So core inflation looks sticky. But I think the core inflation is just another story, okay, because it excludes energy and food. And the way we look at things, as global weather situation evolve, there'll be more calamities and such. Crop production will be actually affected, okay? And if let's say and with OPEC plus cutting oil production, then we have two most important basic necessities, okay, being disrupted. And the core inflation that the Fed that the US government puts in, is a feel good factor only, because when you remove two basic necessity, it's always easy to manipulate the inflation, okay, and give reason to that we have successfully beat the inflation because core inflation has come down. So PPI came in at 0.7% month-on-month in August. Year-on-year, it gained 1.6%, up from 0.8% in July. So you can see that the price of oil is again coming back into the PPI. So retail sales came in at 0.6% in August. Year-on-year, it gained 2.5%. However, it had more to do with rising price of gasoline, which contributed 5.2% month-on-month. So net retail sales less CPI was 1.2%, negative 1.2%. So actually, a lot of it is due to price increase, but not so much on the consumption volume of goods actually increase. If consumption of volume of goods actually increase, then that would be a good signal to the economy. But this has more to do with increase in price, and therefore, it is not good for the economy. So industrial production rose 0.5% month-on-month in August. Year-on-year, it grew 0.2%, driven by defense and space equipment spending, which jumped 3.5% in August and up over 10% year-on-year. So you realize why US is so eager to sell its weapons and so forth, okay, because that's its primary industry, okay? The US main manufacturing industry, is war, okay? So that's why, it's that the US is always encouraging war somewhere else, okay, as long as it's away from US shores. So the National Association of Home Builders Index returned to contraction at 45. Now, previously, it was in expansion. Right now, it came back down to contraction. So the ongoing rise in mortgage rate put a damper on builders' confidence, because with the price of houses, rising still at historical record high levels, and then the mortgage rate is so high, they are seeing less confidence, because the house, like housing starts plunged 11.3% month-on-month, but interestingly, housing permits rose 6.9% month-on-month. Now, what is important that is driving the US housing is that existing home sales fell 0.7% month-on-month in August, and year-on-year it fell 15.3%. Many homeowners who financed their purchase when 30-year mortgage rate was below 4% are refusing to sell as the cost of buying a new home rises. The average 30-year mortgage rate is now 7.96%, based on Forbes data on 29 September. Now, pending home sales declined 7.1% month-on-month in August. Year-on-year, it fell 18.8%. The high mortgage rates are discouraging home buyers from buying as affordability plunge. You can see that this is the affordability level, and if we draw a straight line across, the affordability level has even collapsed below that of 2008, and you can see that the national home price, has reached record high. So this is very negative for the housing. And not only that, in a YouTube video which I listened to, in fact, if you want, you can follow this very well-known economist, Peter Schiff. He is saying that the destruction in the rise in the mortgage rate, okay, is actually causing a lot of the mortgages that the bank owns, you know, very, very is at a loss in some way. Okay, because like if you hold treasuries and the yield rise, okay, that means the price of the bond has fallen. And especially for those banks that have mortgages, the home mortgages of their of the of the of their customers. Okay, so if the mortgage rate currently increase, okay, that goes to show that the quality of their asset has also deteriorated somewhat. Okay, as a comparison. So you say that, you know, the bank might like it even better if people just, you know, go into default, and then they have to foreclose the home, and then they can sell it at a market rate at a higher mortgage. So it's actually just doing a comparison. It does not necessarily mean that the banks are suffering because of the high mortgages, but I think he's really talking about the missed opportunities. Okay, that the asset by right is worth much more, but right now, you know, because a lot of the mortgages at such a low interest, okay, they actually suffer a huge opportunity cost in that sense. So pending home sales declined 7.1% month-on-month, and year-on-year it fell 18.8%. Okay, and the other thing is the LEI, which is the leading economic indicators, which came in at 0.4% month-on-month in August, and negative 7.6% year-on-year. So here is a chart by Games of Trade. Okay, if you want, you can follow them on Twitter. They come up with some very interesting charts as well. Now, here they mentioned that there is a divergence between the LEI and S&P. Now, the S&P is actually in orange, and over the many decades, okay, when the LEI falls, the S&P has a tendency to fall in tandem. Okay, you can see here, okay, but over here you see that it's falling, but the S&P continue to remain up. So that is the difference, and it's one of the biggest in 60 years. So previous readings of negative LEI have led to recession since 2000. So that means that it is just a matter of time before the S&P would actually break down. Now, one of the things why the S&P is also moving up is because there is a stealth QE that is being done by the Fed. Now, because a lot of the banks are suffering tremendous losses in their balance sheet due to the fall in the price of US treasuries. So what they do, they can actually secure a loan, okay, through the FIDC, which they can get the loan and put their asset back on par. Okay, that means they have new money that they borrow, and then their asset is on par. But what these banks do is that they leverage then on their asset, okay, and then, you know, it's being used to speculate again. So that is why the money is coming in. It's not actually a real QE, because it's actually a loan, okay, short-term loan, which they have to repay after 12 months. Now, since the blow up of the regional banks in March 2023, the next due date will be February. And right now, that loan has been rolled over so many times that it is more than 100 billion per week. Now, the other thing is, for the members, I sent out a chart this afternoon, which goes to show that the total US banks are actually sitting on a massive loss in terms of valuation of their assets here, amounting to 600 billion. So that is a major concern. So as I mentioned, there's one regional banks that have fallen 50% over the last week. So we next week could see some action with regard to the bank. So US PMI is signaling contraction. Preliminary manufacturing PMI for September rose from 47.9 to 48.9, the fifth straight month of contraction. So while services PMI slipped from 50.5 to 50.2, the lowest since January. So the PMI actually would give a better picture because you can see that when the PMI goes on towards negative, there is always a recession. So leading, sorry, this. So US default. Now, the default rate on credit card loans among banks not in the 100 largest size by asset is now above the levels reached during the dot-com bubble, global financial crisis, and pandemic crisis, the highest since 1991. Now, these are actually banks that are not in the 100 largest, meaning that they are the medium-sized bank or regional banks or small banks. So that means that some of the banks could be in deep trouble. Now, there was a YouTube video with one of a former Fed insider. I can't retrieve the video after I sort of glanced through it. But the person's name is Naomi Prince, and she was a former Fed insider. And according to her, that the Fed right now is actually monitoring more than 700 over banks, okay, for signs of failure. So this is that means that if as long if all this continue to roll in the coming weeks, we could see a breakage point somewhere. So, and this is a chart by Apollo Management, and they are already seeing that the cycle of default has already started. And as it goes higher, then we could see some big trouble ahead. So recently I did some research on banks here, and one of the major concern with banks is the non-performing loans and NPL. Now, if there's always a cap to the limit of NPL before a bank, is really at risk. So oftentimes the NPL is the limit is put at 4% of the total loans. So if we look at here, all the corporate rates, they have not, all the US corporates, they have not moved to 4%. But if you look at it, US speculative grade, which means those high yield bonds and all those, those are actually, aging past that cap of 4%. So that is a major concern, okay? And if let's say these companies, okay, that the default rate, okay, starts to climb even higher, then some of the banks could be in trouble. So what could happen in October? Inflation will edge higher as the price of oil rises. US could no longer risk, okay, draining its SPR stocks. But I think Biden would continue because it's an election cycle. He wants to say that he has successfully beaten inflation. So you can see that oil price have run up by more than 37.2% ever since reaching a bottom at $67, okay, in June this year. So SPR is falling to its lowest level since 1983, down 40% since February 2022. Now, further release of oil from the SPR could destabilize the emergency supply, and any renewed attempt to refill it will force the price of oil higher, further fanning the invigorated inflation. Now, I believe that if the price of oil starts to fall, then I think the OPEC will say we are cutting production again, because right now it has become a battle of between the BRICS nation and the collective West. There's no way to turn it around, because everything is set in plan already. And this could be one of a collaboration of the West against the collaboration against the BRICS. So I think in the coming months we will see all these revealing themselves, okay, what the game plan is eventually. So the other thing, oil price will likely rise further in October as US shale oil production falls and the price of heating oil rises ahead of winter. In fact, some parts of US is facing an energy crisis, and that energy crisis would actually escalate because some US will see some energy challenges, as Russia just announced that it will temporarily suspend export of uranium to the US. So US utilities may have to search for alternative supplies from the spot market, thereby forcing the price of spot uranium higher. On top of that, Rosatom is reported to be keen to accumulate more uranium. So there's a mad rush into uranium right now. And yesterday, the world's largest uranium producer, Kazatomprom, announced that they are going to extend their operations, okay, to meet commitments, 100% of their commitments. So apparently, when the news struck, a lot of investors started to sell uranium stocks because Kazatomprom said that they are going to increase production. But I think in the coming weeks, price will continue to rise again, and uranium stocks could start to gain pace once more, because whatever Kazatomprom say that they have to increase production is to fulfill long-term contracts, which means it has already been pre-sold. Okay, there's nothing left in the spot market. So I think the market will come to a conclusion that it's not going to affect the price of uranium. In fact, the price of uranium yesterday actually increased, and but then people started to sell the ETFs and stocks and such. So, and Rosatom, which is Russia's largest nuclear company, they also want to accumulate more uranium. And all of this is because there won't be enough supply of uranium even this year. Much more by 2025, we will have close to 50 more nuclear reactors coming into the market. And post 2025, there'll be another few dozens more. Okay, so that is why the early movers right now are really panicking. They want to start to accumulate and store. And in fact, a lot of ETFs are right now being launched that also want to buy physical uranium. Okay, which means they have a contract to secure uranium and store it in their warehouse. So they are also storing uranium so that they can sell it at a much higher price. Okay, and as the price of uranium increase, the ETF also increase. For example, SPUT, which is the Spot Physical Uranium Trust. It has always been, it has constantly been selling units, and every units that it managed to sell, okay, with the cash, they buy more uranium. So they have gone through so many fundraisings and all those, but then their price actually from $10 right now is about $17. So because of the escalating price of uranium. So maybe some of our Singapore friends can actually check, but I read somewhere that Singapore also will be launching a uranium ETF. I'm not sure. Maybe you all can verify later on. I sort of glanced through the news. I'm not sure whether I'm right or not, but it goes to show that many people, many investment funds, they're looking at uranium. So regional banks risk will be elevated due to ongoing CRE market crisis and increased default by credit card holders. As I mentioned, the credit card holders default, has reached the highest for the small and medium-sized bank. Now, as the yields of US treasuries rise, the loss in US treasuries will be magnified. I think the KRE ETF will be under pressure. So in October, borrowers have to start repaying their student loans. And this will affect a lot of people's consumption, okay, as disposable income falls. Could see consumer debt default rising, especially credit card loans. So right now, a lot of consumers are relying on credit card. I think credit card loans, in fact, some months ago, I shared with you that a report showed that people are using credit card loans to pay for mortgages because they have run out of money. So we could see, this impacting the overall economy because as disposable income, is constricted, then we will see it impacting the overall economy. So in fact, there's an early report out yesterday that shows that consumption via credit card has fallen quite drastically. So that means that the September's retail sales will be badly impacted. So chance of a government shutdown starting as early as 1st of October, as neither parties have come to an agreement with the budget. So everyone talk about cutting employees, everyone talk about cutting entitlements, but no one talk about cutting defense, okay? Because the war economy is more important. So now there is more threat that the UAW will walk out, okay? And that could create, that could shut down many US automakers because they are demanding 40% pay, but they try to negotiate. It has come down to 30% increase in pay. Okay, then they want a lot of benefits, which a lot of automakers say that it will actually cause immense cost escalation in their operation. So I think they will hold true to their words and walk out, and that could create a damaging impact on the US auto manufacturing sector, and then we can see it impacting the overall economy as well. And some of the automakers, they are already slashing the jobs as they walk out because they are going to convert to robotics. So Europe, now German manufacturing PMI came in at 39.2%, 39.2 in September versus 39.1 in August, while services PMI came in at 49.8 versus 47.3 recorded in August, but it's still in contraction. France manufacturing PMI came in at 43.6 in September versus 46 in August, while services PMI came in at 43.9 versus 46 recorded in August. So if we put it on a chart, France is actually outperforming Germany, and France is actually in a very is facing a huge predicament because about 15 to 20% of its uranium supplies comes from Niger, and Niger has already cut the uranium supply from France unless they pay the government $200 per pound, 200 euros per pound. So France still have reserves of uranium, okay, in their warehouses, but if this is becoming very protracted over a long term, then France could face an energy crisis because France is the only major nuclear power country in Europe whereby it can export its electricity elsewhere. But without once you have finished consuming its existing stock of uranium reserve, then it could face a problem. And France can overcome that, but that means France have to fight with everyone else in the market to secure the physical uranium, mostly through the spot market, because a lot of major producers have already filled up their long-term contracts. So that could be another impetus for uranium to scale up in price. So UK manufacturing PMI came in at 44.2 in September versus 42.5 in August. Services PMI came in at 47.2 versus 48.7 in August. You can see that the three major economies of Europe is actually facing a deindustrialization process, because if we equate manufacturing with industrialization, falling PMI reflects that. So EU CPI came in at 5.2% year-on-year in August. Down 5.3% in July. UK CPI came in at 6.7% year-on-year in August, down from 6.8% in July. So it seems that inflation is cooling in Europe. But I think, inflation in EU and UK will likely rise in the coming months as the price of oil rises amid demand for heating oil in the coming winter. And energy costs in EU could increase as France loses its source of cheap uranium supply from Niger, therefore impairing its export of energy to its neighbors. So much depends on France's ability to secure new supplies from other countries. And the inflation would likely escalate also because there are news that the ECB say that they are done with hiking interest rate. So because different countries are reporting different type of inflation. For example, Netherlands reported that their inflation, is almost back down to zero. Okay, so but I think some other countries are still facing it, and I believe that as they continue to move towards having a war, okay, more assets being allocated to a war with Russia, then I think it's very difficult to keep inflation down, especially big countries that are in the arms production. Okay, for example, Germany, France, they will actually, and even the UK, they will actually face inflationary pressure if resources are allocated to manufacturing weapons for Ukraine. So what could happen in October for Europe? Inflation could see a revival as price of oil increases. News surface that some EU countries are buying Russian gas as winter approaches. More countries will throw in the towel with regard to Russian sanctions. So I think, they have no alternatives of cheaper energy, and Russia has recently been very tough with Europe. For example, they wanted to increase the sale of lumber to Europe. In the Western countries, wood is often used for building houses. So they want to increase the tariff for export by 80%. Okay, and I think that Russia will sell gas very will not be as cheap as last time. Okay, definitely they will sell it very steep, okay, to the European countries, because they have no other alternative. So that's why there will be more weakness in US economies as PMI for manufacturing and services deteriorate due to a host of reasons, as I mentioned above. Now, illegal immigration from Africa to Europe will spark further unrest and divide the nations. More far-right parties will gain political clout, and civil strife could be a permanent feature, especially among Mediterranean countries. So I think that in a sense, okay, we can see a far-right movement now collaborating with each other, reinforcing each other in different countries against immigration. So, but as they do that, okay, the ruling government would try to control the rise of this far-right movement. For example, in Germany, the far-right party, is securing some victory in certain elections. So right now, the ruling government say they want to ban the party. Okay, I think this is what Evelyn says, that government will try to exercise control. Okay, not only that, governments are also exercise control the way they drive the narrative. Okay, for example, I think Evelyn also has a fair share, when she posted something on Facebook, suddenly everything is gone. Okay. And just as my Facebook page sometimes have 100 overviews, yeah, and then suddenly it's down to 8 or 20. Okay, because we talk about different, things that are not the US government narrative. Okay,
Something
and that's how,
controversial.
yeah, we get censored as well, even for Malaysians. Okay, when we talk about global events, so global trends. So that is what the more the far right movement gain prominence, the more the ruling government would want to impose restrictions. So they wanted, in Germany, they even wanted to ban this far right party, okay, to make it illegal. That is how desperate, they are trying to hold on to the unity, okay, of all the EU to prevent it from breaking up, because part of the far right movement also wants to break away from the EU's policy. Okay, so then EU calls for scrutiny on China's EV sales, but faces discord from Germany. Okay, that's because Germany's automakers have many collaborations with China's EV manufacturers and will not support the EU in this issue. So collaboration does not even it's not in political sense, but also in the business sense as well. As countries realize their disadvantages, okay, then they want to collaborate with major producer. For example, China's battery right now is top notch. Okay, they can they outperform even Tesla's, and Tesla's EVs have to get batteries from China. Okay, and because of that, Ford was supposed to collaborate with CATL to build a factory in Michigan, but because of all the anti-China news in the US, the US people are one of the most propaganda. Want to have a communist. They say they do not want to have a communist company in the US. So Ford has to scrap the deal. But because if Ford cannot get the battery from China, where it's cheap and reliable, and if they get it from the US, okay, the US battery is still far away, okay, in terms of technology advancement versus the Chinese one. For example, Chinese batteries right now, they are looking at solid state sodium, and sodium is actually like salt. Sodium is actually salt. Okay, if they go into that, then there will be a lesser requirement for battery minerals. But because the US does not have that technology, they have to still go for the lithium, nickel, and cobalt form of battery. Although there are some research in the US that they are looking at solid iron state battery, but that solid state iron battery is still on a research basis. So that is how the kind of the ideology battle, okay, is not only among countries geopolitically, but it has even entered into geofinancial and geoeconomics as well. So there'll be more anti-war movement in Europe as the economy stagnates, demanding for a halt in financial and military support for the war in Ukraine. But I think, it is, even though the people might demonstrate, but the NATO collectively, they would want to continue to support Ukraine. Although there are whisperings that NATO wants to wind down the war in Ukraine because they want to concentrate in Asia. So I do not know why NATO want to move to Asia, but anyway, that's the intention. But Ukraine is unwilling unless Russia move out of its territory. So, but Russia is sensing that they can actually get more territory. So that's why Russia is also unwilling to negotiate. And that's why, this will continue to drag on. So if we look at China's economic indicators, CPI edged up 0.3% month-on-month in August. Year-on-year, it gained 0.1%, up from negative 0.3% in July. So people are saying, China is facing a depression, prices are falling and all those. So, but August, there's a change, okay? So right now, there's a gain in the CPI and it's no longer a deflation. Core CPI came in at 0.8%, unchanged from July. PPI came in at 0.2% month-on-month in August. Year-on-year, it still declined 0.3%, but up from negative 4.4% in July. So there is, there's a shift right now back into inflation is moving back into the PPI. Retail sales came in at 4.6% year-on-year in August, up from 2.6% in July. Services sector gained 6.8% year-on-year in August, up from 5.7% in July. Industrial output went up 4.5% year-on-year in August, up from 3.7% in July. So what we see here is that the services sector gained because of domestic tourism. And because of domestic tourism, it's spilled over into the retail sales. And as consumption grows, okay, it also helped the industrial output. But more importantly, I think the industrial output is driven by a few things, which I will share. EVs, yeah, and also the renewable energy. So investment in key fields maintain rapid expansion as funds put into infrastructure and manufacturing rose 6.4% and 5.9% respectively in August. The output of service robots and civil aircraft surged 73.7% and 33.3%. So a lot of people are saying that China is doomed because of demographic, but you see, China's application of robots have increased 73.7%. So China's trade edged down 0.1% year-on-year to 27.08 trillion renminbi. Okay. And export grew 0.8% year-on-year to 15.47 trillion for January to August, while import declines by negative 1.3% to 11.61 trillion. Now, this is equivalent to a trade surplus of 3.86 trillion. China's surveyed urban unemployment rate stood at 5.2% in August, down from 5.3% in July. Now, China real estate, most Chinese cities reported month fall in home prices in August, while fewer cities saw month-on-month price increases. In August, 17 out of 70 large and medium-sized cities reported month-on-month increases in new home prices, down from 20. So China's real estate is still facing problem. Now, what is interesting is that the policy that's been recently introduced. China 4 state-owned commercial banks announced that they will cut interest rates on existing mortgages for first home loans, which means first home buyers. The move follows a decision by China's financial watchdogs to optimize housing credit policies in a bid to reduce interest expenses for mortgage borrowers and help spur consumption and investment. So I believe that China is gradually moving towards maintaining its policy, okay, that housing is for living and not for speculation. Okay, but they also want to reduce the interest expense for household, especially first home buyers, so that they can spur consumption either by enlarging the family, okay, because expenses have come down, they can actually enlarge the family and therefore driving more consumption, and also steering them towards not using properties as an investment, but more towards investment like recently they encourage them to buy gold and buy silver or into fund management uh, products. Yeah. So according to analysts, this lowering of mortgage rates will benefit about 40 million borrowers. Now, in August, the Ministry of Housing and Urban Rural Development proposed a policy option for local governments, according to which a household whose family members do not own a house in a certain locality could be deemed first home buyers when applying for a mortgage loan from a bank. So recently, they have a blanket rule that if you already have a first home loan, if you buy a second home, okay, you cannot enjoy the benefits as a first home buyer. It is blanket across. So, but right now they say that, well, if you buy it in another city where you do not already have a mortgage, you can still apply as a first home buyer. So they make it more easier for people to buy homes in other locations, probably as a future retirement home, or it could be buying a home somewhere in their because a lot of them are actually immigrants. Okay, they can buy a home in their from where they were in the village or in the rural area where they migrated from. So this can actually help spur some real estate activities. So meanwhile, the down payment to buy a home is reduced from 30 to 40% to 20 to 30. Housing collapse and all those will be another lemon. Okay, you just have to go back to our previous session in the month of September, then you will understand there's no subprime loan in China. Okay, last time the lemon crisis happened because there were a lot of subprime loans. People can buy a house, get a loan by 0% down payment. Okay, and that is what caused the housing crisis. But China, those people who buy a home can readily afford to buy a home. Okay, and that is the major difference. Now, the other thing is that the government may introduce something like the HDB. Okay, not exactly, but what they do, the government is looking into establishing an entity which can actually build apartments, but then rent it cheaply to the people. Okay, that is one of the things that is being discussed.
Okay, there's one more thing about China real estate is that from my understanding of being in China for many, many years, actually they also have oversupplies of homes in those second tier cities. And this is why they are also trying to, encourage investment or buying of a home in the second tier city like Chongqing and all these things, and to ensure that the supply um is being bought off rather than to have too many oversupplies in those second tier cities.
Yeah, and recently China actually have refined their green card holders because they want to encourage quality people to work in China. So they actually make some adjustment to their green card policies. So they want to encourage academics, business entrepreneurs, and also people who wants to willing to invest in China, okay, to come to China and then invest in China, start a company in China, or they can contribute to the academia So all this, they're actually trying to encourage more people to move to China, okay? Because I think they also realize that they need foreign talent, especially right now. They also understand that there's a lot of disruption, okay, in the US and the EU because of racial conflict, and also because of their deteriorating economy, deteriorating infrastructure. So, out of 2,400 scientists in the US of Chinese origin, 1,006 have already went back to the US. So, and this is again, the signal that China is finally expanding. PMI for manufacturing came in at 50.2. PMI for non-manufacturing came in at 51.7, and composite PMI came in at 52. So you can see that just now I shared with you the US manufacturing PMI is actually in contraction. EU, Germany, France, and UK is also in contraction. But China, manufacturing finally, is out of contraction. Previously it was 49.8, I think. So right now it's 50.2. Now, a lot of reports say, Mexico has overtaken China, and the mainstream media celebrated, okay, that US is finally decoupling from China as Mexico takes the top position. But if you look at it, this is the actual export of China to Mexico. Okay, so there is no decoupling, okay, from China, because China just set up a factory somewhere, and then they will bring the parts in, assemble in that country, and then it's exported to the US. China, a lot of Chinese companies open those factories that sold clothing and all those in Bangladesh, in Indonesia, but the textile, the buttons, the zip, the cloth are all actually from China. Okay, so that is how they repackage everything, because what is important is that when the final product is like in an apparel or in a shoe, okay, the final product that is exported out of Vietnam, it will just put it a label made in Vietnam, okay, and that's it. Okay, so a lot of this is a misconception. Now, China's economic growth, these are some solid points showing that China's economy is actually growing, powering ahead. Now, the country's shipbuilding output from January to August reached 27.98 deadweight ton in this period, up 16.9% year on year. New orders in shipbuilding sector surged 86.5% from 2022 to a total of 52.31 million DWT. The output accounts for 49% of total global order, and new orders amount to a 68.8% share. So you can see that this is shipbuilding is a major industry. It is something that takes up a lot of materials across wide industrial sector. Okay, Singaporean friends might come across a Chinese shipbuilding company. Okay, and I think if you have bought it on its low, you can actually get quite a very high dividend by now. Okay, so the other thing is that China's electricity climbed 3.9% year on year to 886.1 billion kilowatt hours in August. Power consumed by primary industry went up 8.6% year on year. Power used by secondary and tertiary sectors gained 7.6% and 6.6% respectively. However, residential power use registered a 9.9% decline. So you can see that the power use in major industrial sectors, is going up, but then residential power use actually declined. But if we look at it in a more if we dissect it, okay, it could show two things. One is that industries are powering up because there's a lot of new orders, there's a lot of economic activities, and two, household residential power use decline because more people are working, okay, in the industrial sector. That goes to show that the job situation in China may not be as bad as many people think. Now, in the first 8 months combined, the country's electricity consumption rose 5% from a year earlier to 6.08 trillion kilowatt hours. Now, if we look at it, the China's projection of its economy was at 5% originally, although some investment banks and also IMF say that China will grow between 5.2 to 5.3%. But if we look at it, the consumption in the first 8 months is very much in line with the government's projection of 5%. So foreign direct investment, FDI, into China stood at 847.17 billion from January to August, a decrease of 5.1% year on year. However, you will see some economies in the mainstream that will add on top of that the foreign direct investment included, investment into the Chinese stock market. Okay, and then they show that's a huge gap. Okay, that foreigners are no longer investing in China, but actually China's foreign direct investment does not include investment into the stock market. So these are actually for actual use. Okay, so although it shows a decrease of 5.1% year on year, mainly because I think because of the slowdown in economy, foreign companies that set up operation in China will not be having a lot of funds that is thrown in. But interestingly, if you look at it during the same period, 33,000 new foreign invested firms were set up 33% year on year. So these are probably smaller size companies that they want to explore opportunities in China. Okay, then FDI in manufacturing rose 6.8% year on year, and with that in high tech manufacturing up 19.7% year on year. So you can see that in the China's economy report, a lot of it is stresses on high-tech manufacturing. Okay, now during the period, FDI from United Kingdom, Canada, and France surged 132%, 111%, and 105% respectively. So these are where there are mainstream media from this country saying that China is doomed and all, but the companies, they are in pursuit of profit. They don't care. They see that opportunity, they will move there. So there seems to be some repeat here. The other thing is the heavy industry that China export a lot is in the auto exports, which total 2.94 million from January to August, up 61.9% year on year. Export of passenger vehicles and commercial vehicles respectively climbed 69.8% and 31% year on year. Now, export of NEVs soared 110% year on year to 727,000. So China's general public revenue increased 10% year on year to 15.18 trillion from January to August. Central government collected 6.97 trillion in revenue, up 9.5% year on year, while local government saw revenue increase 10.3% to 8.21 trillion. Tax revenue totaled 12.79 trillion, up 12.9% year on year. The general budget spending expanded 3.8% to 17.14 trillion, resulting in a budget deficit of 1.96 trillion. So China actually expected that they will have to go into budget deficit this year to spur the economy, to help it recover from the pandemic lockdowns that in China it was extended in 2022. Now, but this goes to show one thing. Increase in tax revenue is indicative of a growing economy, because China actually give a lot of tax rebates to spur the economy to grow, if I'm not wrong, last year. So even though they have all the tax breaks, but then the tax revenue continue to go up. So the deficit spending probably is utilized to drive development of infrastructure and to support high-tech industries such as the semiconductor. Now, it is the other way around in the US. You know, US has a high debt, public debt continue to go up, but then tax revenue continue to go down. That is why the deficit in the US continue to grow. So, you know, if you want to judge a country, how is it faring in its economy, you know, look at its power consumption, look at its manufacturing sector, what is it exporting? You know, as long as the country is exporting big ticket items here, it will help the industry, the overall economy to grow because big ticket items have many parts, many components, and many materials that is required for fabrication. So the other thing is the tax revenue. Okay, so these are the things to look at, and rather than just seeing that, you know, what the mainstream media say regarding China collapse and this and such. Yeah. So what could happen in October for China? Now, China's economy will likely remain strong in October as domestic tourism surged during the National Day holidays. I have a Twitter feed that keeps showing me, you know, the number of people that are in the railway stations is crowded. Then the other thing is that the ongoing Asian Games could also help boost consumption. China PMIs are finally expanding, and this trend will likely continue in October. EV export will continue to power ahead in October. And I read somewhere that BYD has overtaken Ford in some category. Yeah. So China's shipbuilding and aircraft industry will also power ahead, especially when COMAC has secured $10 billion order from local airlines. Now, COMAC is China's own jetliner, commercial jetliner, and you know, after it's being introduced, I think early this year, you know, right now its orders have reached $10 billion. Now, the aircraft industry is also a big ticket item, and I believe that in the coming years, we will see that there'll be less and less orders of China for Airbus as well as Boeing. Okay, especially Boeing, because Boeing also make military grade fighter jets and such. So I think if China continue to build up its aircraft industry, okay, and COMAC begins to get more orders around the world, then, you know, China will continue to leapfrog ahead, okay, because as long as it's big ticket items, as I mentioned, it will draw in a lot of economic activities. So real estate will remain sluggish, but stability is in sight. Major Chinese bank could benefit after being hammered relentlessly because of all the bad press. Their PE ratio is low, share price over net asset value is low, dividend yield is above 8%. So I recently did studies on this, that's why I'm just sharing it here. But you know, if you really need to invest, okay, you need to be prudent on things like NPLs, provisions, especially provision for NPLs and capital adequacy ratio. Now, you know, when it comes to banks, sometimes people look at the normal ratio like current ratio and debt to equity ratio. You know, in a bank, this cannot apply because banks always have very high current liabilities, okay? Because the bank takes money from depositors. As long as, you know, China is so big, there are so many depositors that deposit their money with the bank, okay? Their current liabilities are very, very high, okay? And because of the slowdown in the real estate, their current assets, okay, sometimes fall short of the you know, is less than the current liabilities. So if you use the current ratio, then you might think that, oh, you know, this is actually a problem area. So very likely is that as long as the bank is able to grow its assets, then the bank should be doing quite well. Okay, but then if you but then the bank having suffered, okay, because of no one wants to borrow, okay, but then right now there's a lot of chance that the economy is booming. There's more chances that people are willing to borrow money, and also because of encouragement from the government, okay, to encourage to give some life to the real estate. Then the banks could be something that you can consider or look into, but then always look at their NPLs, okay, their provision for NPL as well as capital adequacy ratio. Okay, I believe that there are guidelines on the internet which you can search. What are the guidelines for a limit? Okay, for example, I shared with you just now, NPL is must not be more than 4%. Okay, so for provision for NPL, I believe that it should be more than 70%. Okay, and adequacy capital ratio according to the BIS must be more than 10.5%. So if you look at this kind of thing, you juggle, you do your own research, then perhaps you can then look at the feasibility, okay, of identifying potential banks in this regard. Definitely, I think the Chinese banks have been hammered terribly, okay. Some of the banks, okay, the top few major banks, their PE ratio is actually less than 4. Okay, so this is something to look at, okay, but not a financial advice. Please do your own due diligence. If you are interested in banks, just sharing with you what are the things to look at. So in terms of geopolitics, now the US Abrams tanks will enter the battlefield. Now US is pondering whether to support Ukraine with long-range attack camps missile. If approved, Germany will likewise send their Taurus missiles to Ukraine. Now these are actually long-range missiles, which means if launched from Ukraine, it can easily reach Moscow. So Germany will follow suit if US approve them, okay? So meanwhile, US and UK is providing intelligence to Ukraine to launch attacks on Russia assets. This is a departure to restrict the battlefield to Ukraine, and Russia may retaliate against the US and UK. So again, it's like agitating Russia towards, forcing Russia one day to down the, those P-8 aircraft that is normally used for intelligence gathering. So a lot of talks to wind down the war in Ukraine, but Ukraine is adamant that Russia leave Ukraine soil before the peace talks, and Russia, sensing rapid decline in Ukraine's ability to wage war, is likely to expand the war theater. Analysts estimate that Russia is targeting Odessa next in the next campaign. Now, there's more tension right now in Europe, and there's tension between Poland and Belarus, and even tension between Poland and Ukraine, because Poland has said they will no longer supply weapons to Ukraine, and Ukraine is very unhappy with Poland. And meanwhile, there has been report that Polish helicopters have infringed across Belarus borders, and there's a lot of tick for tack right now. So tension between Kosovo and Serbia, and also between Azerbaijan and Armenia. So Europe is seeing more escalation of tension, and eventually could lead to wider conflict in Europe as a possibility. US, UK, and Canada will pressure India and run a smear campaign against the country after intelligence provided by US to Canada showed that there's a possibility that the Indian government authorized a hit job on a dissident on Canada's soil. So lately, if you read through the mainstream press, you see a lot of smearing of Indian government. Okay, that is because I think India is still, excuse me. That is because India is still adamant on trading in local currencies and still unwilling to sanction Russia. So I think if India pulls too closely to the collective West, then if India do not follow their narrative, then they will actually put pressure on India. So I think that's why Henry Kissinger once said, yeah, to be a friend, to be a foe of the US is dangerous, but to be a friend of the US is fatal. Okay, if I remember the quote correctly. So that is how it is. Now, geopolitics has now entered into a financial war. So the gold in Shanghai is trading at $100 ounce premium above the COMEX and LBMA. China is encouraging its citizens to own gold. In the US, the Fed is keeping interest rates high for longer to maintain US dollar supremacy. Money is leaving the banks to invest in money market funds for the yields. So right now you can see I already identified two different situations. One is going for gold, one is trying to defend the US dollar. So in October, we could see a potential crisis emanating from the banks as their balance sheet implode due to massive losses in US treasuries held as assets and deteriorating quality of mortgages as CRE crisis mounts. Now, more distress in emerging market economies which hold US dollar denominated debt. Now, this will speed up the de-dollarization process among EM economies. I think recently Malaysia also announced that there is less reliance now on US dollar as Malaysia together with its neighbors pursue trading in local currencies. So Egypt just signed a local currency swap facility with UAE. Both are part of the new BRICS. And China will soon be making its move on Syria after agreeing to boost its investment in the country. Now, recently, I wonder if you all follow the story of Assad travel to China for the Asian Games. Now, apparently, if Assad leaves Syria, he could be assassinated while on flight to China. So what happened was China used their own country airlines, okay, to fly Assad from Syria to China. So if let's say there's any attempt to shoot down the China's civilian aircraft, it could be deemed as an act of war. And along the route of the journey, which actually bypassed, is actually through the Middle East to Pakistan and then to China. During the 4 stages, it was escorted by 4 countries' jet fighters to ensure that Assad is not at risk. So this goes to show a very deep cooperation already, okay, between the SCO countries as well as BRICS. So this goes to show that, you know, some analysts believe that by taking this route to bring Assad safely to Hangzhou, it is an indication that China is going to move very aggressively into Syria to negotiate a way out for Syria, because China could be negotiating a peace for Syria and looking at ways to kick out the US military, which is occupying on Syrian oil and stealing Syrian oil that has cost Syria's economy by more than $100 billion to date. So at the same time, the sanctions are impoverishing Syrian citizens. So I think China's next move into analysts pointed out, okay, that the next move into Syria would likely to be a peace deal and more involvement in Syria to bring peace to Syria. So for, you know, some of you might be concerned that, you know, the recent fall in the price of gold and all those, but the most important thing is that central banks continue to buy gold. Okay, so and one of the reasons for the price of gold to fall, of course, there's a financial war because the Fed wants to retain the supremacy, but every time gold fall, there will be a huge buying from central banks. But this is a very interesting chart. Okay, it shows that reported reserves and unreported reserves mainly from China. So you can see that the bank's reserves in gold have reached a new peak, okay, of 38,764 versus its previous peak in 1965, which is 38,347. So what happened was, during the 1960s, of course, that was during the Vietnam War. Now, as the reserve peaked during this period, there was a London pool, okay, organized between several countries in Europe as well as in the US to control the price of gold, to ensure that the price of gold did not go up. But the London gold pool collapsed, okay, in 1969, and that led to the led to Nixon announcing that gold will no longer back the US dollar. And subsequently, there was the years of the, I think, late 1970s, where they started to set up the COMEX, and the COMEX rose into prominence during the 1980s, and they managed to suppress the price of gold. Now, during the 1980s, China started to accumulate gold. They started to accumulate gold locally through their own mining industry. But as China progresses, it starts to accumulate gold very aggressively. Now, this is actually the estimated gold that China did not declare, okay, which means that there could be many thousand tons more. So in 2008, after the financial crisis, China actually allowed its citizens to buy gold. And that was when gold price, more Chinese actually started buying gold because gold price was still low at that time, okay? But even now, you know, Chinese citizens continue to buy gold so much that to date, since 2008, 28,000 tons of gold has been withdrawn from the Shanghai Gold Exchange. So if we look at it, you know, some people say that currently China has more than 2,000 tons of gold, but some people say that there could be another 25 to 30,000 tons of gold that is unannounced, that is held by the Chinese government. Now, that is because they did a calculation that all the gold that were ever shipped to Hong Kong also belongs to China, okay? And China never announced that gold. You know, it's just shown as shipment of gold into Hong Kong. If they include all the gold that China has ever mined, okay, since the 1980s, plus all the gold that has ever shipped to Hong Kong, then added to how much gold that the multiple banks, state-owned government banks, that they potentially hold, they estimated that the amount of gold that the government holds is easily 25 to 30,000. So if we look at it, that the amount of gold that's withdrawn from the Shanghai Gold Exchange, which is almost 28,000 to date, then China could easily be sitting on a gold reserve of near 50,000 to 60,000. So that is, and the thing right now, China is reported to be buying doré bars from the miners themselves and refining them themselves. So if, let's say, this happens, then, you know, we do not know how much gold actually refined, you know, how much gold actually China owns, because China also have mining companies that are all over the world that are also selling it back to China. And that goes to show that something is, the central banks are preparing for something. And I think that if you hold physical gold, then if you look at it on a long-term basis, if we take the benchmark from 2000 onwards to now, the gold actually have actually outperformed the S&P, okay, and silver as well. So that's why central banks are very focused on buying gold, and I think that any downturn in gold price, they will just continue to buy more. So that goes to show something is happening. Otherwise, the central banks would not be accumulating so much gold. And most of the central banks that accumulate gold are somehow from the BRICS nation. So if you look at it, gold as an international reserve is over here. But if you look at it, you know, as a percentage, gold is so little versus the height. Okay. Let's say this was during the when gold left the backing the US dollar. Okay, that's about 60%. Right now, it's just hovering about 10 to 15%. So should central banks, okay, reach back to the same level where necessary to protect the country from stagflation, from let's say 15% to 60%, that's a 4 times increase. A 4 times increase in demand for gold, that would be it will be doing a very, very huge price jump. And if we look at it in historical years, before the Second World War and all those, where, you know, gold has been used as money. Okay, like if I'm not wrong, a piece of silver is $1, and $20 is a piece of gold. Okay, so during that time, okay, the amount of gold that is held, okay, is about 80 to 90%. And if let's say countries need to return to backing, BRICS country needs to back their currency with gold, then we can see a huge jump in gold demand. But the main question is, what if US treasuries are no longer a safe haven, as high interest rate lead to massive losses? There's no safe haven left except the gold and silver, okay, which has always been money. So foreign buyers are not buying gold, and the Fed is also selling. Foreign buyers are not buying US treasuries, and the Fed is also selling the US treasuries as well. So China holding of US treasuries dropped to 821 billion, the lowest since May 2009. And I think each month it will drop by about more than 10 billion, perhaps 15 or 20 billion. I think by the end of December, Chinese holding of US Treasury could potentially drop below $800. So the Chinese are not, they don't actually sell, but they allow treasuries to roll over, and then they are not going to reinvest into US Treasury. So that is the financial war that is happening right now. Okay, Evelyn, back to you.
Okay, so I think we will be having an announcement relating to our books, where we were having a book signing event in Penang on the 15th of October. So whoever who is in Penang, do come and support us at the popular bookstore in Gurney Plaza. So I hope to see you all there. And you can also actually download a copy of our book from this website. Later on, I will give the link to you all. Okay. PC will be there also, right?
Yes,
The one in Penang one.
yes.
Yeah. Okay. So thanks for the support that we receive in KL. So we hope that in Penang we also have a support of group of people that come over, and we will also have a talk and also the book signature as well, the book signing as well. Okay. Next. Let me just share. Can you just continue to share screen,
Okay,
PC?
can.
Yeah. Okay. Next. Okay, so yeah, later on I will give you the free link to the sample chapter. Next. we'll do a summary, and after that, we will do a Q&A. I think there's a few questions here. So, summary from my side is that this month, I think there will be collaboration. It seems that there will be, from what PC has already forecasted, there will be collaboration in the BRICS nation, in a lot of areas. And then there will also be challenges of not enough material, energy, per the Mother Earth Oracle. If you remember, we have already put in the Mother Earth Oracle in 2023's prediction that after autumn, things will go worse, price will continue to increase, and the property market will continue to have challenges, judging from the energy of the month. So over to you, PC.
Yeah, there'll be more banking stress anticipated. In October, US and EU economic indicators will continue to worsen, especially EU. And the US due to government shutdown and UAW workers walk out, while the EU due to continual deindustrialization. Now, China economy will power ahead as PMI strengthen, wider military conflict in Europe as expected, and expansion of war in the Ukraine to the west. Now, oil and uranium could see more gains for the battle for gold-backed commodity trade intensifies. So there is a lot of talks right now that gradually they'll move towards using gold to back the commodity trade. And one of the suggestions, that why China is selling RMB, selling gold in RMB at a much higher price, because if that RMB is converted into US dollar, per ounce of gold is actually worth more in US dollar in China. Now, if we use the fixed cost per barrel of oil, now 1 ounce of gold in the COMEX would buy less barrel of oil compared to 1 ounce of gold from the Shanghai Futures Exchange. Now, this could be one of the ploy to encourage more oil exporting countries to use the Chinese benchmark, okay, at the Shanghai Futures Exchange, so that, okay, they sell the oil to China, okay, and they get that ounce of gold. Now, of course, they will realize that, hey, I actually have more barrels of oil for you for that 1 barrel, for that 1 ounce of gold. But the thing is, if more countries realize that 1 ounce of gold will get more barrels of oil, what will happen is that more countries would want to buy an ounce of gold. And that is why that ounce of gold price will appreciate. And that's why they don't mind selling that, that I actually make less from you, because US dollar wise, selling you more barrels of oil. But then the thing is, the shift will be going towards the Shanghai Futures Exchange as a place to trade oil and gold. And I believe that other commodities eventually. So that will actually gradually shift the pricing of commodities from the west to the east. Okay.
Yeah, okay. So I
Q&A.
think now Q&A. Yeah.